Kitco News Outlook 2026 is brought to you by Discovery, a growing North American precious metals company.
Welcome back. I'm Jeremy Safran. Now, in November, Peter Schiff appeared on this program and predicted that the Federal Reserve rate cuts would backfire, ultimately return to quantitative easing, of course. Now, this week, the Federal Reserve announced a new program to purchase $40 billion in treasuries monthly. In the days following that announcement, silver surged past $66 an ounce on the spot side, making new records, and gold currently holding firmly above $4,300. And while the bond market signals rising inflation expectations, the political narrative tells a very different story. Following a recent TV appearance where Schiff warned of rising costs, President Donald Trump took to Truth Social to dispute those claims. Now, the rhetoric is heating up, but the math is colder than ever here. With silver past $65 and the printers running hot, it's time to position for 2026. And Peter Schiff is here to show us how. Peter, welcome back to Kitco News. Good to see you.
Oh, nice to be back. Thanks for inviting me on.
Well, listen, you heard me off the top here on that timeline. September 16th, you're on the show. You said that those cuts would backfire, usher in a return to quantitative easing. December 10th, the Fed announces this $40 billion monthly T-bill purchase. I mean, you categorize this as QE. The Chairman Powell obviously calls it reserve management. Peter, is this $40 billion sufficient to handle the Treasury's issuance in 2026? Or does the data suggest the Fed will have to expand this program to longer dated bonds next year?
Well, I don't care what they call it. I mean, it's pretty much the same thing. Yeah. In fact, they shouldn't even call it quantitative easing. It's just debt monetization. It's inflation. That's what the Fed did, and that's what they're doing now. But the fact that they're buying short-term securities rather than long-term, which is what they were doing when it was an official QE program, is really a distinction without a difference. That the bottom line is they're going to be printing money, expanding their balance sheet, by buying U.S. government debt instruments. So that's inflation. That's debt monetization. But I agree that ultimately, and not even that far, I'm sure sometime next year, maybe even the first half of next year, they're going to end up expanding that to more than $40 billion, and they're going to extend the maturities on what they're buying. Now, will they ever fess up and say, "Oh, I guess we're doing QE"? I don't know, but it doesn't matter. Yeah. But I know why they don't want to admit to it, because if they admit that we're back at QE, that's also an admission that it's like a habit that we can never quit, because it's like we're back on the drug. We can never get off of it. Mm-hmm. And it's also an admission that it's now a permanent factor in supporting the economy, that the Fed is now, going to be there forever, and that the balance sheet is going to always grow, because even though they shrink it occasionally, they can never bring it back down to where it was when they started the last round. And, who knows where the balance sheet's going to go this time before they try to shrink it again. But I think it's going to go well into, what do you call it? Not 10 figures, but it's going to be over 10 trillion in the balance sheet. Because last time they got to about 8 trillion. So this time they'll probably go, well north of 10 trillion. Who knows? Maybe 20 trillion.
Yeah. Jeez, I hope not. I mean, hey, listen, if let's drill down on why they're buying, because in our last conversation, I was reviewing it this morning, and you warned that the banking system is in worse shape than in 2008 because banks aren't making their bond losses to market. With yields stuck above 4.15, I guess, today, I mean, those unrealized losses are pretty massive. Is this new $40 billion bailout program actually a bailout to prevent a major banking center failure?
Well, who knows? I mean, they obviously have some information that we're not privy to, as far as what's going on behind the scenes there at some of these banks. But look, they're trying to bring down interest rates. They have to buy up treasuries to do that. And so that's what they're doing. They're expanding their balance sheet so that they can buy up these treasuries, because there obviously isn't enough private sector demand for them. So the Fed has to come in, and doesn't have to, but it's decided to come in and supply the extra liquidity by creating more inflation. So that's what they're doing. I mean, they can't suppress interest rates without going into the market and buying up these treasuries, even at the short end of the curve, because they're targeting short-term interest rates. And now they can't even bring them down unless they do QE and buy up short-term treasuries. But right now, they're not targeting the longer end of the bond market. But I believe that's just a question of time before they do.
By December 2026, because we're looking at the outlook here, I mean, by this time next year, do you expect the Fed's balance sheet to exceed its previous all-time high?
Oh, yeah. Oh, sure. I mean, I think we'll exceed the all-time high by next year. Because I said they're going to ramp up this QE program rather rapidly. Because they're going to find that as they start doing it, they're going to have to do more of it, right? It's like, it's like with any kind of drug, you start taking it, and then before you know it, you need more because what you took before doesn't work anymore because you start, you build up a bit of a tolerance. So you need more and more, to get the same kind of high. And so that the same thing is going to happen with the Fed and the money printing and the treasury buying.
I mean, at what point does this stop being a monetary problem and become a fiscal one the Fed can't paper over? I mean, what does that look like for 2026?
Well, I mean, it's not about when does it start being a fiscal problem. It's always been a fiscal problem. I mean, the reason that the Fed is printing all this money is because we have massive deficits. Now, you can argue, what's the cart and what's the horse, or you just say it takes two to tango. But the government and the Fed are working together to rob the American public through inflation, right? That the government runs these massive deficits, which the Fed then monetizes, whether they call it QE or not. That's what they do. And the Fed also helps supply a lot of credit into the market, which is also part of the inflation problem. We have excess consumer credit, and that bids up prices.
What are you watching on silver? I mean, today, obviously, we're seeing silver trade above $66, new all-time highs. In our last interview, you talked about once silver gets above 50, the move to 100 would be relatively quick. I mean, we're now significantly above that kind of breakout level. What's the allocation here? I mean, if for an investor planning 2026, is $100 a realistic target for next year? What's your call?
Oh, yeah. I mean, at the rate we're going, 70 would be very realistic for this year. We're only $3.50 away from 70. But, so for silver to go from 70 to 100, that's not even that big a gain. I mean, it's already up more than double this year. And so I think $100 is a very realistic target for silver in 2026. It could end up being, quite a bit north of 100. I doubt we get all the way up to 200, but that's, certainly it's in the realm of possibility, but I don't want to forecast that. But I'm comfortable with a forecast of 100. And I think gold will at least go to 5,000. Right now it's, 4,300. So 5,000 at a minimum. But I think, if silver's at 100, gold could easily be at 6,000,
Yeah. What, hey, Lizzie, I mean, I've been watching you on X. You've been following this price action. Has it surprised you on the silver? I mean, you've been calling this for a while. I mean, this volatility hasn't surprised you. And is it more driven by industrial fundamentals, or is the monetary premium being priced in now?
Well, I mean, surprised might not be the word. I mean, obviously, I didn't know for a fact that it was going to happen. But it's not a shock to me that it is, because I did, as you pointed out, I did say that once we got above 50, which I thought was significant overhead resistance going back to 1980, that there'd be no more resistance and that would be just a big move up. And so I expected a big move. I would say that the move that we've had and the time frame that we've had it is more than I would have, guessed. But, I'm not shocked that it's happening. I mean, what's really a bigger shock to me was that it took so long, because for years I was, telling people buy silver. I can't understand why it's so cheap. Gold kept going up, and silver didn't go anywhere. And my main explanation was, well, it's the central banks, right? They don't buy silver, they buy gold. And so there really wasn't the buying. And so I don't know where the buying came from, to finally move silver. I don't think it was central banks. I think it was in private demand, but it finally showed up. I mean, people, I guess, looked at how cheap silver was and decided to buy it. But there wasn't that much of it for sale. That was part of the problem. So the price went up. And now that the price is going up, I think it's attracting more buying. In fact, gold has gone sideways. Gold hasn't made a new high in weeks, maybe a month. I forget when gold made its high. Silver just keeps going up and up, making new highs, making new highs, making new highs, and gold just goes sideways. But gold is going sideways, at 4,200, 4,300. That is a great price. And in fact, these gold and silver mining stocks, to me, even though, they've doubled, tripled, some quadrupled on the year, they're still very cheap. In fact, there aren't even any silver stocks that I look at that have made a new high today, even though you have this huge breakout new high in the price of silver. So, and gold stocks, are going sideways too. So we need to see another big move up in the miners. And it doesn't really matter what happens in gold and silver. The prices are already high enough that these stocks should be much higher. But every time there's a pullback, the investors get nervous and they dump these stocks without even paying attention to the fact that even if the metal pulls back, where they're pulling back to is still much higher than what's priced into these stocks. And the earnings that these companies are going to be reporting next year are just going to blow away what any analysts have forecast that they would earn. And so they're going to have to move a lot.
Yeah, no, the volatility has been wild on some of the silver miners. I mean, you see $5 price swings, on a $20 stock. You referred to silver as the poor man's gold, right? I mean, obviously with gold over 4,300, are you seeing evidence of retail participation increasing, or is this rally still driven by institution, future buying, that kind of thing? Last time you were on, you mentioned that they were sitting out gold too.
Who was?
That the retail was sitting out gold as well.
Yeah, well, look, we know that the retail investor has been absent from this market for years. Not that there has been no retail participation, but that it's been minimal compared to, what it should be or what the retail investor, is doing instead. And one of the big distractions has been Bitcoin because of the way it's been marketed as digital gold, as an alternative to gold, as something that is superior to gold, that is gold only better, gold 2.0, given the way it's been marketed and given the relative returns. Because remember, when Bitcoin first came on the scene, that's when gold really peaked out. It started around 2011 when gold was at 1,900. The public didn't really start looking at it until 2017, and then more so, during the pandemic and 2000. But during that period of time, gold didn't go anywhere, just went sideways. But Bitcoin went way up. And so that was a very compelling argument to a lot of people where, hey, why are you buying, analog gold when you can buy digital gold? This is the new gold. And look, the new gold is up 10x. And your old-fashioned gold hasn't done anything. And so a lot of people that might have bought gold in 2019, 2020, 2021, 2022, 2024 even, bought Bitcoin instead.
Yeah.
Now, after a couple of years where, Bitcoin really hasn't gone anywhere and gold is doubled, more than doubled, and silver's more than doubled, I think a lot of people who made the switch out of gold or silver into Bitcoin are regretting that. Because, Bitcoin is down more than 40% priced in gold. It's down, I haven't checked, it's well over 50% priced in silver since it's peaked.
Yeah.
At one point, I think earlier in the year, Bitcoin actually had a higher market cap than silver. And that was probably right near the peak. Where you could have sold all your Bitcoin and bought silver. But I think that a lot of people who got frustrated and left gold or silver for Bitcoin are gonna come back. They're gonna go back to gold and silver. Now they're gonna take a hit in doing that, right? They're not gonna be able to buy back nearly as much gold and silver as they sold. But I think they're going to make the switch.
It's been interesting. I mean, just watching even on-chain metrics, still subdued compared to past breakouts with this, I don't know, it's around 87,000. And on this topic, we can play this clip because I wanted to touch on your recent debate with CZ in Dubai. I mean, there was a moment where he handed you a gold bar on stage and, you couldn't necessarily verify. Louis, I think you got the clip.
Try it. Yes. Yeah, it's heavy.
Is it real gold or no?
Well, I don't know. I mean, is this what you're trying to? I mean,
Now, listen, I mean, I got you kind of moment. But I mean, critics obviously say that this proves the case for digital assets. But did this stunt kind of change your view on the need for tokenized gold as a verification tool?
Well, the whole debate was supposed to be Bitcoin versus tokenized gold. So a kilo bar of gold was not even relevant to what we were supposed to discuss. But yeah, if you're dealing in tokenized gold, it's just as easy to verify as Bitcoin because they work on the same principle where there's a blockchain. And, if you get tokenized gold delivered, then it's legit, right? You know immediately what it is. But as far as using physical gold as a medium of exchange, nobody is going to use just a kilo bar of gold. I mean, that gold's bar is worth over $100,000. I mean, how am I going to, buy stuff with that, right? I mean, number one. So if I was going to use gold as a medium of exchange, I would be using coins, right? And, they would be much more easily recognizable to the naked eye. And, if they were minted by a mint that I knew of and you could look at it and look at the ridges on the sides and, you could drop it on the ground and, on the table and listen to the sound and compare it to the one you already have. And yeah, it's pretty much the same thing. You would be able to know, but nobody, is going to be handed a bar that, barely has any markings on it that was kind of made by a private, mint, or not even a mint, whatever, fabricated, and it just has a weight on it. How would I know if it's legitimate? I mean, I'm sure it would have some gold in it, but I don't know if it has all the gold that it claims. I don't know, and especially when he's asking me like that, I'm thinking, what is it not? Is there something wrong here? He's trying to get me to say it's real gold and say, he's got some tungsten in it or something. I don't know. But the thing is, the Bitcoin community is so desperate to try to show that I lost the debate and that CZ won it, that's what they're going to play up. They're going to play that up as if it somehow invalidates gold and proves that Bitcoin is superior to gold, because I can't know for sure whether that big bar is actual gold or not. But if we're using tokenized gold, well, then of course we know. And but the main difference between tokenized gold and Bitcoin is tokenized gold is actually digital gold. It represents ownership of real gold. Bitcoin represents ownership of nothing. So when you validate Bitcoin, you validate nothing. When you validate tokenized gold, you validate something. So there's a huge difference there. But no matter what happened at that debate, right? The Bitcoin community was going to say that I lost.
I was going to ask you, I mean, in a room like that, and I mean, kudos to you for going to it. I mean, you still got some fans. I mean, people are still taking pictures, and I guess it goes back to that retail audience. I mean, at $87,000 Bitcoin, are people more interested in gold when you're at these shows? Are they asking you more about it?
I mean, there's some gold buyers there. Some people kind of like to have both, which at least is better than the people that just have Bitcoin and no gold at all. But no, I'm very popular at Bitcoin events. I have a lot of fans there. A lot of the people that own Bitcoin own it because of me. They don't own it because I told them to buy it. They own it because I helped educate them on economics, on money, on inflation, on central banks. And it's what they learned from me that ultimately led them to Bitcoin. And so, they credit me for that, but, they also enjoy my content. They followed me for a long time. And so, yeah, I got, there's a lot of overlap between, let's say, the Peter Schiff, audience and people who own Bitcoin. Even though I'm very critical of Bitcoin, there's still a lot of common ground there, where people like me. And then, of course, I'm the most famous Bitcoin critic. And people are hoping that they'll convert me one day. I'm like, the prize. And they assume that I'm going to come around eventually.
Yeah.
That's the problem. See, like, once you believe in Bitcoin and you actually believe in it, then you assume that everybody else will believe in it. I mean, most people in Bitcoin recognize that I'm not an idiot. They think I'm an intelligent guy. They just don't understand why I don't get Bitcoin. And they just assume that eventually I will. Because if they want to acknowledge the fact that here I am, a very intelligent guy who understands money and economics, yet I don't like Bitcoin, that forces them to maybe think, well, maybe if Peter Schiff doesn't like it, maybe there's something there. Maybe this guy knows something, right? They don't want to accept that. They don't want to accept that they could be wrong and I could be right. So they just assume that I'll come around eventually. Or some of them assume that I'm just pretending, that I'm a secret Bitcoiner and this is just my marketing, spiel. Or I've got some kind of ulterior motive, like I'm trying to talk down Bitcoin so I could buy more of it.
Hey, I got to ask you about another famous moment of yours just a couple of weeks ago here. I mean, obviously the administration's stance on inflation is a little bit different than yours. And after that appearance on Fox and Friends earlier this month, President Trump posted on Truth Social calling you a jerk, citing cheap gas prices as evidence that inflation's down. However, looking at insurance, rent, and services costs continue to rise here. For 2026, if the White House continues to push for lower rates while dismissing these affordability concerns, I mean, what's your outlook for inflation next year?
Inflation is going up. I mean, pretty much got no way to go but up. I mean, the budget deficits are big and getting bigger. The Fed is cutting rates and doing quantitative easing. So that's a toxic combination. I mean, that's how we got into this mess. So inflation is going to rear its head in a big way. I think that by the final year of the Trump term, inflation will probably be higher than it was in the first year of the Biden term. Biden set the high mark now at 9.1, but, almost all that inflation was the result of policies that happened under the Trump administration, not under the Biden. Biden, is responsible for inflation in 2022 or 2023, 2024, and some of the inflation we've had under Trump. But now pretty much a lot of Trump's policies are starting to kick in. And the Fed, of course, the Fed is the primary bad actor in all of this. And, the reason that inflation started to come down under Biden was the Fed was hiking rates and, it was doing quantitative tightening. So money supply shrunk somewhat, but credit kept expanding. That was a big problem. But they were pushing back a little bit. But now they've got the monetary spigots open again. We're doing rate cuts. We're doing QE. So you're going to start to see, some big impacts on inflation, certainly by the second half of 2026 from what the Fed is doing now, probably the first half from, what's already been done. The only bright spot, I guess, in the inflation landscape is oil prices, and oil prices are low. I'm not disputing it, although they're not as low. Trump said $1.99 a gallon. I mean, I don't know anyone buying it at $1.99. But yeah, I mean, I'm looking at a barrel of oil now. It's $56 a barrel. That's cheap. And in fact, when you compare it to $4,300 gold, it's never been that cheap outside of a couple of weeks during COVID. So you're talking about really, really cheap oil. But that's just one price, right? There are plenty of other prices that have gone way up. And so on average, prices are going up. And in fact, not only did Donald Trump say that prices were going down, he said they were going substantially down. I mean, what's substantially? Because even if prices were going down 1 or 2%, I mean, that's not substantial. So what is he talking about? Is he claiming that prices are dropping 10% or something like that? Because they're not only are they not dropping, they're going up. But Trump is lying. That's it's ironic that he's lying on Truth Social, of all places, and he got mad at me for telling the truth. I told the truth on Fox and Friends, and then he had to lie about it on Truth Social by claiming that I'm a Trump hater. When, it's got nothing to do with how I feel about Trump. You don't have to hate Trump or like Trump, to know reality. The reality is prices are going up, whether I like Trump or not. That's reality. Trump's living in denial if he wants to claim that they're not. But then he's calling me a jerk. He's calling me a loser. I mean, I mean, why am I a loser? Why am I a jerk? Just because I disagree with the president, I'm a jerk and a loser?
I mean, the White House would argue that we're missing the supply side story, right? That we're nearly a year into his term, and I mean, if the president unleashes American energy and cuts these regulations like they're trying to aggressively, doesn't that crush costs across the board? I mean, why wouldn't that deflationary boom?
First of all, he hasn't unleashed energy. Energy production is not really up. I mean, it may even be down in the United States. The main reason that we have cheaper oil is because OPEC nations increase their production. That doesn't have anything to do with what's happening over here. That may have been a favor for Trump. I don't know. But also, oil prices have come down because the economy is weaker. So there's less demand for that. So that's more responsible than any kind of unleashing an oil boom. I mean, look at the rig count. I mean, the rig count is lower, I'm pretty sure, now than it was when Trump was elected. So there's not just that's just rhetoric. I mean, Trump wants to claim credit for oil prices coming down. So he has to say it's because of my great energy policy. But the policy has not had much impact. Now, is it possible that it's had some impact? Sure. I don't know. Where would oil prices be if Biden were still president? Maybe they would be higher, but they're very cheap right now. But I don't think they're going to stay cheap. So we'll see. By next year, oil prices could be double. They could be back up at $100 a barrel. Then what is he going to say?
Go back to miners just for a second, because in September you noted that the easy money kind of had already been made, but that miners still remained relatively, undervalued to gold. GDX now hitting new highs for the 2026 outlook. I mean, you predicted small caps would be rock stars. Why 2026? Do you expect maybe an M&A cycle to begin as major producers look to replace reserves? Or
yeah, well, I think so. I mean, we have a lot of the smaller stocks in my gold fund, the Europe Pacific Gold Fund. EPGFX is the no load symbol. And yeah, I mean, a lot of those smaller names haven't moved as much. And I think they're going to play catch up. I mean, obviously, when people look, back and say, hey, what can I buy? What's still cheap? What hasn't moved, right? There's some obvious stocks. But also, these larger companies are going to make so much money next year. They're already making so much money. What are they going to do with it? Now the most obvious thing is, well, we need to expand our reserves, right? We need, we're making so much money mining gold. We got to get some more gold that we can mine, right? Because, our costs are $1,500 an ounce and we're selling it for $4,500 an ounce. They're making $3,000 an ounce. I mean, like this printed money. But they may find that the cheapest way to expand their reserves is not to go drilling, but to go buying on the stock market. And look at these smaller companies that have already done the exploration, have already proved out the reserves, and just don't even have the capital to develop what they own. And they'll just go and they'll buy them up. And the whole industry has had a hard time even raising money. And the conditions, the banks will force them to hedge. Oh, we'll loan you money, but you need to hedge your gold or your silver. We don't want to take any risk that the prices go down. These guys don't have a clue. These bankers don't realize that gold and silver prices ain't going down, right? That they're going to go up. But the companies can't get the loans unless they agree to do a hedge. But, when a big company like this, they'll just buy up these companies. They got all the cash flow they need. They don't need any financing. They can finance whatever they need because they're going to be swimming in money based on prices. And you say, yeah, the easy money has been made in that the stocks have had a big move. But it wasn't so easy in a sense that you had to have the conviction. You had to be right. You had to have the foresight to know that the price of gold was going to go up. So in that respect, that easy money has been made if you were smart enough to know that this was going to happen. But from another perspective, I think it's even easier to make money now because you don't have to go out on a limb and project that gold prices are going to move up. They've already moved up. So the next move is even easier, I think, on a typical investor because it's not as risky a trade. because it's obvious that even if the gold price just stays where it is, these stocks have to go up a lot to catch up to where the price already is. So that might be an even easier trade to make, to buy cheap gold stocks when gold is at 4,000 than when it was at 1,500. Because when it was at 1,500, people thought it was going to go to 1,000. Yeah. Now that it's at 4,300, even if gold drops to 3,000, which is extremely unlikely, but even if it does, the gold stocks are still cheap. Yeah. Where they're trading now, even if gold goes way down.
So, I mean, is the bull case for juniors actually kind of dependent on the majors staying liquid and confident here, not on the juniors themselves? I mean, what's the trigger that tells you capital is rotating down the food chain?
Yeah, no, I don't think it's dependent on that. I just think that's going to happen. But even if companies don't get bought out, they will ultimately develop on their own, because, the investment case is going to be so compelling based on the appreciation in the price of gold, right? So, and they'll be able to get equity financing. They won't need to go to banks. They'll be able to go to investors who want more exposure to gold and silver, who will, buy equity in these companies and provide them with the cash they need to develop, the gold and silver deposits that they already own.
At this math, I mean, you talked about how they're, some of these majors are just printing cash at these margins. I mean, they're historic. If, we talked about this disconnect, if the business model is profitable, why the sector is still trading at such a discount to the S&P. But what's the street missing outside of that? And I guess more curiously, Peter, who do you think is going to come back to this market once they start? I mean, is it the old money, these dividends? There's a pretty good value here.
Yeah, there's tremendous value there. I mean, yeah, the companies are going to raise their dividends, and eventually just the dividend yield alone might attract investors. But a lot of it may be returned in share buybacks, right? Rather than just paying dividends, they'll just use their cash to buy back their own stock. And so that's also going to be compelling because Wall Street's going to see these huge stock buybacks, and they're going to want to own the stock as they know that those buybacks are going to result in higher stock prices, just, in and of themselves. So you're going to see more money, especially, if the AI bubble has burst. And so money's coming out of the AI trade. The crypto bubble, I think, has clearly burst. So, where are they going to go, right? I mean, because there's always going to be what's hot, what's next, where can I make some quick money? Yeah. And so where's the hot money going to ultimately go next when it leaves AI and it leaves crypto? Mining stocks could be where they end up, and maybe the sector will get out of hand for a while. I mean, maybe we'll get to a point where I have to start considering selling some of what I own. I mean, we're not there yet because I don't think anything is expensive. But when you get a crowd involved, when you get real momentum and a lot of money coming in, things tend to get expensive. And then they get even more expensive, after that. But at some point, you could, take some money off the table. And, I would be looking forward to that because I've really never taken any money off the table in my mining portfolio. All I do is I keep adding to it.
I'm sure some CEOs would be excited, probably excited to hear that right now. Hey, I mean, listen, if you had to pick one asset class to outperform in 2026, I mean, would it be physical silver or junior miners?
Well, yeah, I mean, maybe the junior miners, because they have a lot where they could go, especially junior silver miners, right? I guess those guys could really go. But I also think the emerging markets could make a big move. Well, I don't know if they'll move as much as junior mining companies, but yeah, I think those stocks could have a much bigger year next year, triple, quadruple. Almost like Bitcoin-ish type returns back from the early days of Bitcoin when Bitcoin was still going up, not now when it's just grinding lower. And by the way, Bitcoin is grinding lower until it crashes, because that's what I think we're setting ourselves up for, is a big crash in Bitcoin, and maybe even led lower by strategy stock. That might be the catalyst that brings down the entire ecosystem. I mean, and it would be, fair, I guess, because it was strategy buying that really powered the whole thing. I mean, Saylor has spent over $50 billion, $50 billion buying Bitcoin. So, where would Bitcoin be without that 50 billion of buying from one entity?
Did you finally meet him in Dubai, Peter? Did you get to chat?
No, well, I didn't know. Look, I was at a party and he was at the party and I noticed him. And I noticed him first because I heard his voice. I heard him pitching Bitcoin as he was, he's just nonstop talking about Bitcoin, right? But I heard him talking. I said, is that Saylor? Because it sounded like him. And then I peered around the corner and there he was. And so I really, because I had just called him like the biggest con man on Wall Street, like just a few days earlier. And so I didn't really know, like, do I go up to him? What do I do? I can't just say, hey, Michael Saylor, shake his hand after I just called him a criminal. So I kind of like ignored him. I didn't like kind of even talk to him. And he did the same with me. I assume he noticed me. I don't know. But it was at somebody's house. So it was more of an intimate party. It wasn't like a huge gathering. So maybe there were 50 to 100 of us at this party. But I guess, he kind of stayed at his end of the party and I kind of stayed at my one time I walked by him to get to the bar to get a drink. But that was as close as I've come to him. I mean, I actually was in the same room. I was in the same room with him when I was at the conference in Vegas in May. And that's when he gave his keynote and he mentioned my name twice, to say that I'm foolish for buying gold and Bitcoin's going to outperform gold. Well, Bitcoin's gone down a lot versus gold since he gave that speech. Bitcoin was over 100,000 and now it's about 20,000 lower. So it's down about 20%. And gold is up well over 50% since the summer of this year. And so far, his speech is not looking too prescient.
Well, but we'll keep it open. I mean, Saylor, if you're watching, you want to come on this show, you and Peter can do a little debate here. Hey, listen, let's keep you moving. I mean, because I want to get your reaction from kind of the government in 2026. In our last conversation, you warned that as the dollar falls, we could see kind of foreign exchange controls implemented to stop capital flight. If the dollar index breaks 90 in 2026, do you expect the administration to lock the exits? Are we looking at limits on how much money Americans can move offshore and into hard assets, anything like that?
Well, 90 is not low enough. Maybe if we're below 70, they may start, and it's dropping fast. I think the dollar would have to get into kind of uncharted territory. A dollar index of 90. I mean, we've been there many times. I mean, I don't think that's going to be a level of concern. But, if things really get out of control and Americans are really trying to flee from the dollar, the government may block the exits. I mean, that's a typical thing that governments would do, is try to impose controls because they think they have to stop the bleeding. Because as more Americans want to sell their dollars, you put more downward pressure on the dollar, and that creates a self-perpetuating downward spiral. And so they want to try to stop it by telling people you can't do that anymore, right? Like, it's no more selling of dollars. They won't. But then, of course, people will just buy gold, right? If they can't buy foreign exchange, they'll buy gold. So then what are they going to stop you from buying gold? I mean, so it's going to be difficult.
Final outlook. I mean, listen, you warned about this crisis, that there will be this loss of confidence in the U.S. government. I mean, midterms next year. Outside of that, though, I mean, if your viewer is holding cash, what's the single specific kind of signal to watch for in 2026? Is it a failed treasury auction? Is that dollar index breaking 70, like you said? I mean, what marks the start of panic in your eyes?
I don't know. I mean, obviously a failed treasury auction. Eventually we're going to have one. But so far, the government has been able to find buyers for all of its bonds. But, one day it won't, right? I mean, so one day one of these auctions is going to blow up. And, we'll see if that's the catalyst for a crisis. But look, something is going to be the catalyst. There's going to be a pin that pricks this bubble, right? Yeah. Eventually. Yeah. I don't know, right? What it's going to be. Yeah. I just know that it's going to be something. And most people won't recognize it when it happens until after the fact, right? So maybe, it's not because so I don't think you'll get a warning like, aha, that's it. Now I can get rid of my dollars because I've seen that this thing has happened. I think, you have to already be pretty much out of the dollar and protected so that when the crisis happens, you don't have to try to scramble to react to it. You're already where you need to be. So we'll see. I mean, I just know that I'm going to be watching whatever it is that does it. I'll be watching it from the vantage point of a safe place, right? I won't be, scrambling, to get into a lifeboat. I'll be in one. I've been in one for years, like waiting for this thing.
I mean, in that scenario, is physical gold safer? I mean, we talked about if they lock up the exit. Is it safer, if it's outside the system, or is it riskier because it becomes harder to move or trade or, monetize when you need it the most?
Well, I mean, for most Americans, the amount of gold that they're able to afford can easily be transported. You can put it in a suitcase, and it wouldn't even take up the whole suitcase. You could just stick it in, or stick it in there somewhere, and you're fine. Yeah. But for people that have hundreds of millions of dollars worth of gold, yeah, that might be a little bit more problematic to just try to carry it all around. Not that you couldn't, you could carry it around, but that may be a little bit more difficult to get through the airports.
Well, listen, we got lots of gold bugs watching, but we're also getting some newer audience members. And we got these questions coming from some of the younger crew. I mean, if you were in your 20s today with limited savings, we see this rising debt in the financial system under, structural strain. What is one decision or discipline you would adopt in 2026 to avoid becoming a casualty of this monetary environment?
Well, I mean, I think I would pretty much be making the same types of investments I'm making now, just with less money, I guess, unless I could be 22 now and have the same money I have now. That would be a great position for me to be in. But if I, starting over from scratch, I mean, I think I would do the same thing. I'd be buying, gold and silver mining stocks or physical gold and silver and stuff like that. Because I pretty much had the same views when I was 22 that I have now. So
yeah, true.
I was a gold bug back then. So
nothing's changed. Okay, what's maybe
what's changed is we have a lot more debt and a lot more inflation. So we have a lot more to be worried about now. Although I was worried about it back then because I could see the direction that things were headed. It just, it took a lot longer to get to the point that we're at than I would have expected back then. I would have thought that the day of reckoning, if you talk to a 22-year-old Peter Schiff, who was still worried back then about deficits and stuff like that, I would have thought that we would have had a day of reckoning much sooner. And maybe by now we would be in much better position because we would have taken our lumps, swallowed the medicine, repented, and we would have been, a long time in recovery. But instead, we managed to kick the can down the road until I'm in my 60s, 40 years of can kicking. And so it's a much bigger, it's a much bigger problem than I imagined 40 years ago.
On the flip side, Peter, I mean, what would be one mistake that you constantly see young people making today that will matter far more than they kind of realize over the next decade?
Well, I mean, some of them are buying Bitcoin. I think that's going to end up being a mistake for them. Some of them, they got the wrong major in college. They're they're wasting their money on liberal arts degrees, or in many cases, they're wasting their money on college when they shouldn't even be going. So it depends. College is not for everyone. But yeah, I mean, there's not that many other mistakes that, I mean, obviously when you're young, you make all sorts of mistakes, which is a good. I mean, the best time to make mistakes is when you're young, because you have plenty of time to learn from them so that you don't make them later in life when there's more at stake. You can't lose that much money when you're young because you don't have that much money. So that's the good news. And the lesson that you learn is very valuable and that maybe you can utilize those lessons when you're older and have more money, so you don't lose that. Because when you get to be my age, you can't lose all your money because that's a lot because you've been building it up for a long time, and you don't have a long time to earn it back, right? So if you lose all your money when you're 22, the good news is it's probably not that much, and you have a lifetime to earn it back. So, that's why I don't feel that bad for the young people that are going to get wiped out in Bitcoin. Valuable lesson.
They'll come back to gold.
I do feel bad for people my age who have been caught up in this and who put their retirement money in Bitcoin. I mean, that's very unfortunate that people have been encouraged to do that. And I do think that there's going to end up being a lot of lawsuits. I know in America, when people lose money, they tend to blame others, and then they tend to lawyer up, and they sue whoever made money, at their expense. Yeah. And when it comes to Bitcoin, right, this is a transfer, right? Zero sum, negative sum, but people lose money because to other people who made money. And the only reason some people make money is because others lost it. Right. And so the people who made money are obviously going to be targets of litigation for the people who lost money. And so depending on, how culpable they are, I mean, there are a lot of people that are going to be hit with a lot of lawsuits.
That's interesting take. I mean, I could ask you then, I mean, gold survived regulation because it existed before the rules. Does Bitcoin's risk come from the fact that its entire history is unfolded inside, the regulatory state?
No, I mean, the risk of Bitcoin is that it's a pyramid. It's Ponzi, right? It's based on the greater fool. There is no underlying value really of Bitcoin, right? I mean, you can argue that maybe there's some remote value that's a tiny fraction of its current market price. But the people who are buying Bitcoin today, right, and who are paying $86,000 for a Bitcoin or whatever fraction of a Bitcoin they're buying. Most people don't buy a whole Bitcoin anymore like they used to when they were like a couple of bucks. But, you're paying $86,000. It's because you think that somebody else will pay you $300,000, $1 million, right? That's why you're buying it. You're not buying it because you need it for anything. You're buying it because you think you're going to get rich by owning it. But the only reason that somebody else will pay you $1 million for your Bitcoin that you paid $86,000 for is if they believe somebody's going to pay $10 million for it, right? Because they don't need it either. So eventually it collapses. And, people have made a lot of money. I know people that have made hundreds of millions, even billions, who I personally know, and not Michael Saylor, because I don't know him, but I know people that have made hundreds of millions or more than $1 billion in crypto, right? And the reason they made all this money is because they sold a lot of crypto, right? They bought it 10 years ago, 15 years ago, and they've been selling it the last few years. Now, will they get sued by the people who bought it from them? Some of it might depend on what they said to encourage that, right? Because, there's going to be people that are going to say, hey, this guy lied to me. I was defrauded. He promised this, I mean, I think like some brokerage firms could be sued if they broker the deals. I think like advertisers, companies that let you buy this in your IRA. I think, a lot of these companies that have Bitcoin IRAs, they are very vulnerable because I can see a person who puts their money in a Bitcoin IRA for their retirement and then loses it, suing the company that says, you never should have let me do this. This was my retirement money. You should have known that this was too risky for me. This is what happens in America, right? I always try to blame somebody. Anybody could file a lawsuit and then you get a sympathetic jury. But I always thought CNBC was going to get sued by their viewers who lose money in crypto. And I bet if you, did discovery and you subpoenaed all their, correspondences, I bet you'll find some very incriminating evidence that shows collusion between the crypto advertisers and the network and the way they choose to cover Bitcoin and crypto and the positive spin that they put on it, and the fact that they don't really allow any naysayers on the air. I think that this, that's a legitimate reason that somebody might sue by, hey, I watched CNBC because I thought I was getting unbiased news. And little did I know it was a giant infomercial. Yeah. They didn't have the proper disclosures. And I invested all this money and I lost it. And I blame CNBC. All right, well, that could be a class action lawsuit. Sailor's going to get sued 8 ways from Sunday. I can't even, the SEC should be after him for stock fraud. I mean, for the stuff that he says. But I know, he's the CEO of a public company. I mean, I know a lot of strategy investors are going to sue him. But this is America, unfortunately, right? The lawyers always clean up. They come in. They're like, the scavengers that come in for the carcass. They eat whatever they can. So they're going to be all over the crypto industry.
Yeah. The next wealth transfer.
The politicians who embraced it, maybe it'll be different politicians. Right now, it's politicians who get money, donations from the Bitcoin whales, and they get votes from the minnows who want to be whales and hope the government will turn their small Bitcoin fortune into a big fortune by using government taxpayer money to buy Bitcoin. But the next big thing is government's going to be pointing fingers, because you're going to have all these Bitcoiners who have lost their money. And now you're going to have the politicians coming in trying to figure out who to blame and who to, potentially prosecute, right? That's going to happen.
Crazy.
But there's going to be all kinds of new regulation. Oh, yeah, all kinds of new regulations to, really crack down on stuff because, we got to protect the public from capitalism because look what happens with capitalism. You get pyramid schemes like Bitcoin and you get all these people losing their life savings. So we need the government, which will be a mistake.
We're going to get some comments here, Peter. I like it. I'll tell you what CNBC is not really talking about. They're not leading the news like our newscast with silver prices. It's an interesting time. I got to ask you, though, what would be the better value for buying and holding right now? Gold at 4,300 or silver at 66?
Well, look, first of all, they rarely mention gold and silver. I'm watching CNBC this morning and silver's up like $2.50, right? It's over $65. Now it's over 66. This is a huge move. It's up 3%, since yesterday. And they don't mention it. They don't mention gold. But they do mention Bitcoin. They put Bitcoin up on the screen and they say, it's down 1%. Okay. It's like that's all that exists. They'll mention the NASDAQ and then they'll mention Bitcoin and some other cryptos, Ether or Solana. That's all their audience cares about. Now, maybe they know their audience. Maybe the only people other than me who watch CNBC are people who own AI stocks and Bitcoin because anybody who owns any legitimate investments doesn't watch, right? Because so it's hard to say.
Sounds like a very passive machine,
What's the horse? But what was you asked me a question? Yeah, is gold or silver? Look, I've been telling people to focus on silver more than gold ever since gold got over 3,000 and silver was still like $30, right? I was like, that's 100 to 1. But now it's more like 65 to 1. So I still think we're going up to 50 to 1, but, it's more balanced now, in my opinion, because now I think gold's getting ready for a move because gold's kind of gone sideways for a while. Yeah. So I think we could see a move in gold. But I really have been telling people to favor the miners. And, and now they've had a big year. I was very, very big on the miners. In fact, I put out a special report in March of this year called The Best Way to Buy Gold, and it was buying mining stocks. And that was a very well-typed special report because since then, the miners have dramatically outperformed gold and silver, right? They've just done incredibly well. But I still think they're cheap. I still think you make more money buying mining stocks than you buying physical gold and silver, although you take on more risk, right? Yeah. So that's the trade-off, right? I don't see a lot of downside risk in gold and silver, even though they've gone up a lot. I don't think silver is really going back below 50. So if you buy it at 65, you got about $15 of downside, but you still have hundreds of dollars of upside as far as I'm concerned. Gold, I don't think gold's going to go much below 4,000, maybe 3,900, So I don't think there's a lot of downside, in gold. But, mining stocks are very volatile. I mean, they could go down a lot, even if the price of gold doesn't. That's just how they trade.
Yeah, true that. Yeah. All right. Well, we'll be tracking your 2026 targets closely. Hey, speaking of YouTube shows, and you were talking about your show, you got it back on. You're part of the algo. Anywhere the audience can find you, Peter?
Oh, on YouTube? Yeah. Well, I've got my YouTube channel, the Peter Schiff Show. I do my podcast. I put it on YouTube. I also put a lot of content on the Schiff Gold YouTube channel. So those are the two YouTube channels I use. But so make sure and subscribe. And where I'm the most active on a daily basis is on X. I'm constantly posting there, so you can follow me. I've got almost 1.3 million followers now on X. I'm not on Truth Social.
Well, I was going to say even the president, even the president's starting to pay attention here, huh?
I don't know if he follows me on X. Now that I'm on his radar, I'm surprised he didn't comment on my last name. Because he has a lot of run-ins with Schiffs.
He does.
But I have no relation. I have no relation to.
Yeah. Hey, thanks, Peter. Appreciate this. Happy New Year, right. Merry Christmas, and have a great holiday season.
All right, you too. Take care.
Peter Schiff laying out a volatile roadmap for 2026, a fractured Fed, a silver breakout, and the potential for capital controls as the debt crisis continues to deepen. Now, we'd also like to thank our 2026 Outlook sponsor, Discovery, combining high-quality gold-producing assets in Canada with the largest undeveloped silver deposits in Mexico. You can find out more at going to discoverysilver.com. Now, of course, we want to know from you, what do you think is going to happen in 2026? A boom cycle, a bust cycle? Let us know in the comments. And for the daily updates on these markets, make sure you're subscribed right here to Kitco News. I'm Jeremy Saffron. For all of us, thanks for watching.
Kitco News Outlook 2026 is brought to you by Discovery, a growing North American precious metals company.